Let's talk about how saving alone isn't always safe. To do that, we have to first discuss inflation. What's inflation? Generally, when the government prints money, when they flood the economy with more dollars and there are more dollars chasing the same amount of goods, this is inflation. Since 2000, the government has been furiously printing money like drunken sailors, confessions of a former drunken sailor, or more literally, they've been releasing electronic dollars into the banking system so that there's more money chasing, relatively speaking, the same amount of goods. Therefore, the dollars are worth less. It'll cost more dollars to buy the same amount of goods or services. Think about pricing for things that you know or are familiar with. Think of a can of Coke. When I was a kid, a can of Coke was 35 cents. Then it went to 50 cents. Now I look nationally, it's about $2. Think about housing. My parents bought a house outside of Boston, a wicked nice house for your Bostonians out there, for $30,000. It was in the 70s. They sold it in the 2000s for $300,000. By the way, they're the same people that bought a house for $30,000 in Brooklyn that are selling it for $2 million. So now that we understand a little bit about inflation, where is a safe place to put money? Well, clearly a checking account at any bank, your basic checking account, is the worst place to try because you never will keep up with inflation. What's the amount of interest you're earning in an account like that? Well, I just looked at my own kids. It's 0.05%. My own is 0.05%. So where is a place to store your money that's safe, that may keep up with inflation? Clearly, it's not a bank account. A basic checking account is going to earn you less than 1% national average, 0.05, right around there. You might say, what about a high yield savings account? Well, sure, you might get, a few years ago, you could have gotten 5%, but that's cyclical. It's going to highly depend on the inflation rate. So nowadays, you might get 3.5, you might get 4%, but check the fine print. Again, on a high yield savings account or money market type account, it depends on how much you have in that fund, what type of fees you're going to agree to pay, how much can that bank constrict access to it or raise the rates without telling you. You might say, what about putting my money in the market? Well, the stock market does have the potential for yield. It also has the potential for great loss. And no one can time the market. And no one can tell you what the tax rate will be because the tax rates flip-flop depending on what political stripe you have in office. I would say, choose the blue pill over here in my right hand if you think that Congress will get together and quit spending or lower spending or stop spending so much of our tax money. Choose the red pill if you believe that the only way that Congress is going to come together is to raise taxes to cover our enormous debt. So, of course, at Real Change Financial, we recommend a properly designed whole life insurance policy with as high of a cash value as you can afford to design. What do I mean by afford? Well, if you're keeping all your money in a place like a bank, learn from my mistakes, please, and consider putting that money somewhere else where it's going to earn an average historically 5-6%. And that's going to be on a guaranteed rate. And that's going to be free of taxes forever because the insurance system is aloof and apart from the regular investment system, broadly speaking. So now that we understand inflation, and now that we understand a safe place to save, check out below, get in touch with us,